In this video, I'm going to explain how to identify transactions by looking at the impacts of the transaction to the accounting equation. Now, how do you identify a transaction? By looking at the impact of that transaction to the accounting equation. Right, let's take this situation number 1. Now, what has happened here? Assets increase and assets decrease due to this transaction. Now let's try to find two possible transactions that have taken place in this situation. There are several transactions that will cause this particular impact to the accounting equation. Assets increase and assets decrease. So let me explain you 5 possible transactions that lead to increase assets and decrease assets at the same time. The first possible transaction is cash purchases. These are the purchases of stock in cash. Okay, we'll tell you how to write the long form of this transaction. This is purchased stock of goods. Now, for us to write a transaction, if you are given a question and if you are asked to write a transaction, then definitely you need to put some value, some amount. So for each transaction, I'm going to put some reasonable monetary value. So let's say purchase stock of goods at rupees 50,000 in cash. Or if you want, you can stop from here. And again, this implies that this transaction is a cash transaction. When a business purchases stock, what happens? Assets of the business will increase because of stock. Since stock increase, the assets of the business will increase. On the other hand, again the assets will decrease because the business has to pay cash to the supplier. So cash, the asset called cash, will reduce. Because of that, the assets of the business decrease. Now what about the second transaction? Cash sales. Cash sales means sold stock of goods, let's say at rupees 70,000. Now this is a cash sale. If you want, you can write in cash or without these two words also, it's fine. Now, how come this transaction lead to increase assets as well as decrease assets? Because when a business sells stock for cash, the asset called cash will increase. Therefore, definitely assets will increase. On the other hand, the stock in the business will reduce because the business sells these stock. Therefore, stock is an asset. Therefore, assets again will reduce. Assets will decrease. Right. The next transaction is credit sales. Cash sales, also credit sales lead to increase assets and decrease assets. Now, how do we write a credit sale? Sold stock of goods, let's say at the same value at rupees 70,000. Now you have to have these two words on credit. Because in the absence of these two words, the rest of the sentence, the rest of the transaction will imply that this is a cash transaction. So make sure to use these two words on credit. Now, what will happen when there is a credit sale? When business sells on credit, the stock will reduce. So assets will decrease because of stock. And on the other hand, definitely the business will not receive cash, but there will be credit customers, the customer who owes to the business. We call him debtor. So debtors in the business will increase. So as a result, assets will increase. Okay, the next possible transaction is receipt from a debtor. Debtor is a customer who owes to the business. Now the business receives cash from a debtor. So how do we write this transaction? We can say received. Let's say, let's put a value, rupees 70,000. Let's say the business receives cash of this credit sale from the debtor. It's rupees 70,000. The credit sales amount is rupees 70,000. Now the business receives this 70,000 from the respective debtor. So receive this much, rupees 70,000, let's say from a debtor. Now, if there is a particular name of the debtor, we can write the debtor's name. Let's say if it is Amal, we can say received 70,000 from, instead of a debtor, you can say the name of the debtor. It's Amal, right? Now, what happens because of this transaction? Again, assets increase. Why? The business receives cash from this debtor. So assets increase. On the other hand, another asset will decrease. So that is the debtors. The total amount of debtors now will decrease. So assets decrease. Right. The last possible transaction is purchase of a non-current asset for cash, in cash. Now, for example, let's take, now we know there are several non-current assets. Example, land and building, motor vehicles, machinery, equipment, furniture. So let's take a machine. If I write the transaction, purchased a machine, let's say at rupees 100,000 in cash, or without in cash, even fine. So this transaction lead to increase one particular asset and decrease another asset. So assets increase. What is the particular asset that will be increased? It's machinery. Because the business purchases a machine, or the business purchased a machine. On the other hand, another asset will reduce, therefore the total assets of the business will reduce. So what is this asset? It's cash. Now again, let's look at the second impact of the transaction. Assets increase and equity also increase. For this situation, we have two possible transactions. One transaction is capital introduction. So how do we write this transaction in the long form? Let's say owner invested. We have to put the value now. Rupees 100,000, or let's take 500,000. 500,000 to the business as capital. Now, what happens due to this transaction? Definitely, the assets of the business will increase because the asset called cash increase due to this transaction. On the other hand, the equity of the business. Equity is the value of assets belongs to the owner of the business. Equity will also increase because of this capital. So remember, capital can be in the form of cash or in the form of a property. So capital can be the private cash of the owner or the private property of the owner invested to the business. So there is another possible transaction that you can write, the capital in the form of a property. Owner, let's say owner invested his private motor vehicle to the business. So how do we write it? Owner invested his private or personal motor vehicle. We need to write the value of the motor vehicle now. Motor vehicle worth of, let's say, rupees 200,000 to the business. Let's say 500,000 here. 500,000 to the business as capital. So both transactions are possible under capital introduction. So what happens in this case? Again, total assets of the business increase. Why? The asset called motor vehicles increase due to this transaction. On the other hand, the total equity increase because of capital. Right, another possible transaction that we can write according to this situation is receipt of an income. Now, what if the business receives some income? Now, what are the examples for income? Let's say the business received rent income or interest income or commission income. So let me write the transaction. We have to say received. It's the income. So we can say commission income, and we need to include the value commission income of rupees, let's say 20,000. Now, what happens due to this transaction? Again, assets of the business increase because the business receives cash as the income. Then on the other hand, equity of the business increase because of this particular income. So this income is commission income. The third situation is assets decrease and equity decrease. The exact opposite of second situation is the third situation. So what are the possible transactions? We can take two possible transactions here. Cash drawings and also stock drawings. How do we write a cash drawing? We can say that owner withdrew. If it is a cash drawing, it has to be a certain cash amount. Rupees, let's say 20,000 from the business for his personal use. Now, how do we write the stock drawings? Same way, owner withdrew, let's say rupees 10,000 worth of stock. Stock of goods of rupees 10,000. We need to always put a value to our transaction. From the business once again for his personal use. Now, because of these two transactions, the assets as well as the equity of the business will reduce. Now, in the first transaction, when it comes to a cash drawings, what happens? The assets of the business decrease because cash in the business decrease because the owner takes cash from the business for his personal use now. On the other hand, the equity also will reduce. Why? Because of these drawings. And in the next transaction, when it comes to a stock drawing, again assets of the business decrease because stock decrease and the equity of the business is also decreased because of the drawings. Another possible transaction for this situation is, for this particular impact is payment of an expense. Now, what are the examples for expenses? Let's say electricity charges, insurance charges, maybe rent expense. So when we do a payment of an expense, again this impact will happen. Assets will decrease, also equity will decrease. So let's say that the business paid electricity charges, paid electricity charges of, let's say, rupees 5,000. Now what happens because of this transaction? Assets of the business will reduce. Why? Because the business has to make a cash payment now because of this expense. So cash reduce. On the other hand, the equity, the assets belongs to the owner of the business. The assets belong to the owner of the business also decrease because of this expense. This expense is electricity charges. Therefore, because of electricity charges, the equity reduce. Fourth situation is assets increase and liabilities increase. We can take two possible transactions for this situation. Credit purchasers. What are credit purchasers? Purchased stock of goods. Let's say for rupees, let me use at here, at rupees 50,000 on credit. Now we need to use these two words, on credit. Now what happens because of this transaction? The assets increase. Why? When the business purchases stock, the stock of the business increase. On the other hand, liabilities of the business also increase. Why? These stocks are purchased on credit. So the liability called creditors increase. The other possible transaction is obtaining a bank loan. Let's say obtained a bank loan of rupees 500,000. Now what happens? The assets of the business increase because the business receives cash from the bank loan. On the other hand, the liabilities of the business also increase because of this bank loan. The liability called bank loan. Now for this situation, we can even take this transaction. Not only credit purchase of stock, we can take credit purchase of a non-current asset. Say for example, purchased a machine. Let's say at rupees 100,000 on credit. Now even in this transaction, because of this transaction, the assets of the business increase, also the liabilities of the business increase. Assets increase because machinery in the business increase. Then liabilities of the business increase because of creditors. So you can take credit purchase of stock or credit purchase of a non-current asset for this situation. Okay, the last situation is assets decrease and liabilities also decrease. This is the exact opposite of fourth one. Now, what are the possible transactions here? We can take the opposite transactions of fourth situation. Now, we know that because of credit purchases, the liability called creditors occur. So how do we reduce creditors of a business? By paying cash to the creditors. So if a business pays cash to the creditor, the creditors, the total creditors of the business will reduce. So let's write this transaction. Paid, let's say rupees 70,000 to a creditor. Now what happens because of this transaction? Assets of the business will reduce because business has to pay cash. Then liabilities of the business also reduce because creditors of the business reduce. Then another possible transaction is repayment of bank loan. This means settlement of bank loan. Let's say the business settled rupees 10,000 of the bank loan. Now what happens? Again, assets of the business reduce and liabilities of the business also reduce. What is the liability? It's a bank loan. And what is the asset? It's cash. I hope you understood how to recognize transactions by looking at the impacts of the transactions. Don't forget to watch all the videos in Accounting Equation playlist. Then you can get a clear idea of how transactions affect on the accounting equation. See you in another video. Don't forget to subscribe.